And as stocks fall, pressure is also mounting on the Federal Reserve to lower interest rates. You can see what's been happening again with the futures this morning. Interest rates also have been closely watched, with the 10-year trading below at times 1.2%. Steve Liesman is here. He has much more with what's being considered on
Becky,
this.
we have to change the charts again. There's been a dramatic change in the outlook for the Federal Reserve, with the question now not whether the Fed will cut at its upcoming March meeting, but now by how much. Take a look at this. We have to do a new chart, or a new form of this chart, which is now we're looking at a 100% chance of a 25 base point cut.
You never put March on until yesterday.
I never put March on alone until yesterday. And now, because of the craziness that Kevin Warsh started, a 47% chance, and I'm only saying that half jokingly, a 47% chance of a 50 basis point cut, that the Fed acting or doing a 50 basis point now in play in the futures market. Okay, now just remember that piece on the right there, that 50 basis point. Now it continues. There's 86% chance now of that second cut, or the 50, happening in June, a 62% chance of it happening, of a third cut in July, and now this is also new, a fourth cut being built in. So a full percentage point now being built into the probability. The Fed has not affirmed this market sentiment. In fact, you could almost argue they're leaning against it. Yesterday, Chicago Fed President Charles Evans became the latest Fed official to assert the Fed's "it's too soon to tell" policy. Quote, "I think it would be premature until we have more data and have an idea what the forecast is to think about monetary policy action. But we're monitoring it very closely, and if we see something that does require adjustment, I'm confident that we will give that all the consideration that it needs." That's really a great three screens there to explain exactly where the Fed is. It's unclear right now how Fed officials feel about how effective a rate cut would be. While there's pressure on Fed Chairman Jay Powell to act, there's also skepticism. Peter Bookvar writing this morning, there is nothing that will be stimulated monetarily from a rate cut or two that isn't already being stimulated by the very low rate environment. One issue for Powell, which Kevin Warsh has talked about this morning, is it would represent yet another regime change. And I think we have a screen that shows the different periods of time that we've been through on this. If you take a look, we had the 17, there it is. There's the cut. There's the hiking regime. Then you were cutting, and now we were in this holding regime.
Yeah, but you have a totally different scenario.
Agreed.
With the coronavirus coming up, and that's an unknown factor, something that couldn't have been predicted and is affecting the globe. Agreed.
The question is how. I think that Powell agrees with Kevin, and we'll get to Kevin, on this issue of it'd be great not to change policy at every turn. Mm-hmm. That if you could have a length of time where you were at a certain place or in a certain regime,
but when the
that would be preferable.
Sir.
So I think that he would change in this regard. I think they're monitoring it, and I think they're waiting for the moment. And that moment may be one where they've done it in coordination, and I think you've been involved in that, Kevin. It takes some time to put everybody together, with a big question about whether Europe, this is not 2008 in the sense that Europe or at least Europe then had a positive rate to cut.
Right. So it's different, but these big institutions have muscle memory working together. The ECB staff and the Fed staff, who are both absolutely first rate, they have to have been in discussions over the course of the last week, sharing information. That's a deep relationship. And once you get to a weekend, it is not difficult for them to find common language in which others could sign up to about what each of them could do to support their economies. Of course, as you suggest, having negative rates already in Europe makes it such that it's more difficult to find ways to stimulate the economy. But I don't think it's more difficult to buy some time. Christine Lagarde is a fabulous leader. I knew her well in her old jobs. And while they're in the middle of a comprehensive review, as Becky suggested, the facts on the ground are changing quite quickly.
Yeah.